Hey business warriors, Business Shifu here, and today we are going to be asking the question, how much money do you need to start investing in the stock market, okay? Now, you may think this is a video to say how much money do you need to invest in shares, etc. Well, we will be getting to that later in the video, but first of all, we need to resolve one issue, okay? And that is that most books on the subject of stock market investing do recommend that you have at least 6 months of your monthly salary or your monthly expenses invested in a savings account, okay, in cash, okay, in a liquid asset, should you need it, before you think about investing in the stock market, okay? And the reason for that is that stocks and shares, they're much more illiquid than cash, okay? Because if you buy a stock, its value may at first go down before it goes up. So you don't want to be forced to sell it if, for example, you lost your job or you had a medical bill that you had to pay, God forbid. You don't want to be forced to sell it at a loss, okay? So most of these books on the subject recommend about 6 months of your salary, or if your salary is a lot higher than your monthly expenses, you could go for 6 months worth of your monthly expenses. Now, I don't think that's absolute. I think that if you're a guy who's got a wife, 2 kids, and a mortgage, then yeah, go for 6 months, okay? 6 months of your monthly expenses. But if you are in a much more free situation, for example, maybe you're a student living in student dorms and you're living off of student loans, you don't really have an income, or even if you're living with your parents, you don't have very much financial responsibility, you could even go for 0 or close to 0 in a savings account and still invest in stocks, okay? Or if you were somewhere in between, you know, you could put 3 months of savings, you know, monthly income savings in a savings account, and then start investing in stocks, okay? So there's no 100% right or wrong answer, but that's kind of a guide. You do need some liquid assets, some cash saved before you start investing, because investing, you cannot just casually sell your stocks when you need money, because you might have to sell at a loss, and then there's no point in doing it. Okay, now let's actually get into how much money you need for actually purchasing stocks or funds, ETFs, mutual funds, etc. So if you are investing through an app like Robinhood, the answer is very little cash, actually. You only really need the amount of cash for one share of a certain company, okay? That could be as little as $5 or $10. And why is that? Well, that's because Robinhood charges no fees, okay? They do not charge commissions when you buy or sell a stock. Other brokerages can charge you between about $3 and $10. My brokerage charges $5 every time you buy or sell. All right, so you first have to earn back that fee, and only then are you making money. So it's not really worth it if you just buy one stock. But Robinhood, no commissions. You can basically literally buy one stock of something. However, there's a few problems with this. One is that at that stage, you know, at that sort of level, when you're just dealing with $5, $10, whatever, it's really more of an educational experience rather than making any money, okay? Let's say you bought one stock for $10 and you kept it for a year, it went up 7%, you would have made 70 cents, okay? So that's just, you know, it's a joke. You're not making money, but you are having an educational experience, so it could still be worth it for you. Secondly, though, Robinhood, they have very, you know, minimal customer service because they are so cheap, all right? So most people, most serious investors will want to switch most of their investments to a proper, you know, full service brokerage later on. Perhaps they'll still keep something in Robinhood, but they'll start investing in a full service brokerage like Charles Schwab, for example. Robinhood has very minimal customer service. Their phone number is only available when the market is open. It's not toll free. If you send them an email, apparently it takes them about 48 hours to get back. I was reading an article on some website, they tested it. Contrast that with Charles Schwab. I contacted them recently to ask when the end of year tax forms would be available, 1099 INT and 1099 DIV, which are tax forms for your brokerage account. And I typed into an online chat on their website, and an agent came online within 30 seconds and responded to me and told me the exact date when the forms are coming available. So very, very good customer service to help you deal with tax issues and all these kind of things. When your money is small, that might not be so important. You might not have so many issues with it. So anyway, now we're moving over to talking about full service brokerages. You've got a little bit of clue in the amount of money that some of these brokerages will set as a minimum for opening an account. So we'll talk mainly about Charles Schwab because that's one I use, but you know, TD Ameritrade, Fidelity, they're all good, you know, good brokerages. But Charles Schwab, they require a minimum of $1,000 to open an account. Now you can take some of that out afterwards, but you have to have $1,000 in there when you open it. You got to give them a check for $1,000, okay? So that already gives a clue, okay, that sort of they feel starting to invest, you need at least $1,000. Otherwise, you're not really seriously investing. It's just kind of like, an educational experience or something, right? Let's look at individual stocks first. So individual stocks, they will cost you $4.95. Let's round it up to $5, $5 commission. When I buy stocks, and some funds that also charge commission, because some funds charge commission too, although Charles Schwab does have a few commission-free funds, stocks or funds that charge a commission, I buy them only in increments of $500 or more, because that means that $5 is 1% of the money you're paying for that stock or fund. So you have to first earn back that 1%, and then you're earning money on top of that. That's actually quite a lot. So 500 is my minimum, but ideally I would buy them in batches of 1,000 or more, so that $5 and then 0.5%. Okay, so you have to earn back 0.5%, and then after that you're earning money through growth and through dividends, etc. So if I was going to set up an all individual stock portfolio, all right, just stocks, no funds, I would want to have at least 10 stocks diversified across the market in different sectors. And if I was saying I need a minimum of 500 in each stock to offset the trading fees, I would need $5,000 for opening that portfolio. Okay, so someone who's just going into individual stocks, I would recommend $5,000. You want to be diversified across 10 different stocks. Someone who's doing funds though, if you just put $1,000 in, you could just put that all into index funds, tracking the market, and you would get that diversification, and so that wouldn't matter. So you could literally just start with $1,000. Or if you wanted to do sort of a hybrid version of that, you put some into funds and then you have a little bit of money in stocks that you like, you could go $2,000, $1,000 in funds and maybe 2 different stocks of $500 each. That way you get the diversification from the funds, and then you also can, kind of speculate a little bit or, on some companies that you like, or perhaps you like a company because it pays a good dividend or whatever, but you'll be protected a little bit more because you got the diversification in the funds, okay? And I myself have this rule. I always put 50% of my portfolio into funds, various ETFs, index funds, etc., and the rest of the 50% is in stocks. So I have about 5 or 6 stocks. I don't need a full 10 because I've got, diversification with the funds. So under that scenario, you'd put about $2,000. If you want to ask how much I did, I put $4,000 into my account when I first started, and I put $2,000 into various index funds and $2,000 into individual stocks. So that's my opinion on this matter, all right? We'll just recap. To start investing, you do need a few months worth of your expenses. If you have a lot of financial responsibilities, like a mortgage, a family, etc., then we would recommend 6 months. If you're somewhere in between, maybe 3 months, and if you're someone living at home with family or whatever, you really don't have much in the way of financial responsibility, then you could just have nothing saved. In addition to that, if you're investing through Robinhood, you could start with just a few bucks, a minimum amount, $50 here, $50 there. But when you're just putting really low amounts in, it is really just an educational experience. However, it's good to start early and you can build it up. The earlier you start, the longer you have to grow the investments. So don't feel bad if you're just putting in $20 a month or something like that. In 10 years time, that will amount to something. And then we're talking about regular brokerages, full service brokerages. Their requirement normally will be at least $1,000 to start. If you're doing all individual stocks, I would say $5,000. And if you're doing sort of all funds, maybe just $1,000. And then if you're doing some in stocks, some in funds, I would say between $2,000 and $4,000 is a good amount to start with. And of course, guys, if you don't have that much money, you could just start with $1,000 in funds, and then as you start adding more, you could go into individual stocks later. But it is important to get that diversification to protect you if a company goes bust. So I hope you guys have liked this. Obviously, it's not rocket science. It's not a hard and fast rule. So please share some of your opinions on this in the comments below. Maybe some people have a different opinion to me. That's absolutely fine. I'd love to hear what you say. Please subscribe for more videos every week. We'll see you next time. Bye-bye.